Hello and welcome to the closing beat, everybody. Happy Monday to you. How you doing out there? We are financial advisors here at Jazz Wealth that hate the weekends. They're just so boring. I actually watched a little football, the Chiefs and the Packers. I actually watched a little bit of that, but I like when the markets are open. We can talk, we can learn, we can strategize and do all that stuff. While other advisors are playing checkers, we are playing chess here. In particular, I try to share a lesson each day. One quick thing that we did with a client. One of them was I would call the geeky side of tax loss harvesting, where we took a bunch of stuff together and said, well, okay, that's how tax loss harvesting works. We've got to go a couple layers deep with you. I thought that was really, really cool. Our Wine and Wealth last week, we talked about new additions, updates, and transactions and things inside of your portal. So if you're one of our clients and want to check that out, you can absolutely do that. I'm going to get right started here today and say, did you see the Russell small caps? Bam! The Russell 2000 on Friday, I mean, it was like the coolest thing. It literally outperformed the other other major indices by 6 times. Like that big of a day, man. Just blasted off, easily closing above the 200-day moving average. There is a lot of that rotation we're talking about. Last week, we spent the whole week talking about large caps. Why are we chasing those? What are we doing? I got clients telling me all the time, I want to go in large caps. I'm like, not sure I understand there, and I'd like to fight back on that one. The Russell continuing today. The Russell also outperforming every index today. I mean, there's just no other way around that. Just an easy outperformance of everything. Small cap, large caps, mid caps, whatever. You've got, it beat small cap value, beat every other factor there. Small cap index, small cap growth. I mean, just a small cap type day. And I won't discount mid caps either. I just don't find them very exciting. So, you know, that's what it is. But we're up 3% for last week. So the Russell 2000 gaining 3% just on the week there. And another, let's just call it 1% here for today. Very, very cool. If you look at the S&P 500, it is the, first full week of trading here in December. Bit of a slow start, a little bit of back and forth there. It's kind of normal. It's just a little bit early. So if you look at the S&P, and we'll cover a few things in a second, but the normal intra-month performance of the S&P tends to be up about 0.5%, down about 0.5%, then Santa Claus rally if we get a Santa Claus rally. So it would be very normal to see this just give us a little bit more, then a little bit back and forth, and then mid-month, it's like right smack in the middle of the month, is when that Santa Claus rally historically gets started. Sadly, we know that it starts to get really quiet. You know, it'll be just if it is a rally and we haven't already had it, it'd just be a real slow, kind of a boring thing. I'm not talking about this, blast off rally like we've seen here. And besides, we just did a bunch of work. So what is the likelihood that that will continue there? We are moving into the holiday period, which we know tends to be a little bit slower. So, I've shared this with you a couple times over the course of the year. This is the rolling daily volatility of the S&P 500. And so more volatile going through October, then calming down through November, and of course December representing some of the most boring days of the year. That's okay. We'll use it for time to do some lessons and things like that. In orange, you can see sort of a moving average. In other words, just an average of the rolling volatility. So if you look at the orange, you can say, oh, wow, it clearly peaks here towards the end of the year and then gets really, really quiet. We are essentially 2 days past this mark right here. So I was sharing that in our notes from Jazz there. Now, the stock market tends to contract like we were talking about. I'll take a look at this one here. We know this is one I've shared with you. The average range for the S&P in the month of December tends to be tight, quiet, no large real pullbacks, no real large rallies there, just a little bit as we go into the end of the year there. So we know not to expect really, really massive moves out of nowhere. There's an 18.6% chance that you will have a plus or minus 1% day in December. That's the lowest of all the months there. So it's very normal to see things a little bit quiet there. No real problem and expected. Every sector was positive last week besides communication services, which happened to pull back. What we got? Large cap tech stocks. I would even add tech only gained like 0.15% for the week when everything else was 1% plus. Even energy had a good week there. And so, well, they had a good run, right? So large cap tech stocks, once again, showing you, if we zoom into a sector level, they're showing you, hey, we're a little heavy here. We've been doing a little bit more than we should. I mentioned energy a second ago. This quarter, actually, it's kind of weak. So you measure quarter to quarter, right? We're almost done with the final quarter of the year. We're down about 6%, but even energy managed to, whatever this is here, managed to add up to at least a little bit of a gain there. Lots of talk over the weekend about cuts. Lots of talk about how much the U.S. is actually pumping out more than Saudi Arabia, et cetera, and we're shipping it overseas and all that. And so that becoming more of a headline, I should say there. Now, if we look at the S&P, there we go. Like I said, the average performance through December is just up about 0.5%, down about 0.5%. That little range right at the beginning of the month. And then the middle of the month, if we do get a Santa Claus rally, it tends to happen there. I could also make an argument for, let's just call it quits here at 4,600. You could easily see that, right? Who's going to aggressively sell if there's no real news? Why would you? We know that you pretty much have a gain. Most everybody has a gain. So why would you sell and pay the taxes early next year when you could just wait a couple weeks and then sell after that and, you know, pay the taxes a whole year and a couple months from then? So kind of interesting there, I think myself. I want to do one other thing. I want to go over here real quick. We haven't done this in a while. Here's a breakdown. I know it's a little bit small. These are the sectors of the S&P 500. Now, I talked about communication services a second ago being the weak link, so you can see it there. That's the only negative one for the week. Tech, obviously very extended. It just couldn't get anything going, but look everywhere else. Now, this is taking you over the course of about 9 months. So look at real estate, a little bit of a rally, of course, with interest rates there. Utilities trying to do the same thing. Everywhere else that almost doesn't matter as far as it goes, you know, moving the market wise, everywhere else seeing at least a little bit of support. So that's how we know the stock market's not in a position to, you know, frantically fall, because it's only really 2 areas of the market that have done some heavy lifting and maybe just want to take a break. If they take a break, that would be enough, like you saw today. That'd be enough to get the market to just ease back, but it wouldn't be enough to get your 10% pullback, your 5% pullback, whatever it is. We would need all the other sectors here, which currently are showing that they're holding their own, we need them to reverse course as well. In order to do that, we'd need something from the Fed. We'd need some geopolitical event. We'd need some reason to believe that that should happen, and that is currently not the case. Bitcoin, you guys falling for this? So Bitcoin 42.7, that's going to be new recent highs anyways there. Careful. All right, I'll say it again. It's exciting. I get it. Everybody's talking about it. But at the end of the day, what are you doing, right? There's a reason why we don't talk about it often. Hey, gold. I'm going to talk about this real quick because a massive move in gold. Now, sometimes my job as an advisor is to help someone grow their wealth, right? And sometimes a function of that is stopping you from losing money, right? If I can stop you from losing money, then that means you grew, right? You were going to lose that money. It was going to be a problem. Well, gold, we know, we talked about this last week, the golden cross in gold really is not very advantageous. It's not something that you want to get all excited about. And today just proved itself, man, just absolutely proved itself. Here's the slides from last week. Over the last 45 years, when you have the golden cross, which we have in gold there, the next week tends to be negative, the month net negative, 3 months negative, 6 months negative. It tends to pull back. What do we have in gold? It blasted off, got really excited. Chances are, because you all heard your commercials over the weekend, buy yourself some gold. You never know what's going to happen in this world. And you got excited and bought some gold, you know. And then the futures went up because they're like, oh my God, people are buying gold. What happened? Immediate reversal. That, what we call a topping tail, is a stamp by the bulls. And I'm going to say it a little bit more aggressively. When you see something like this in terms of a tail, for example, go over here, right? You had a nice rally to new highs at that point, right? It turned around in the same day, leaving behind a tail, or dare I say, a middle finger, right? Look at the fingers. You see a big middle finger sticking up at you? There was a guy locally that had a radio show. He said that one time. I said, I'm going to steal that, right? What do we have here? A big middle finger. If you decide that now is the time to jump into gold. Add to that all the stats and everything that we have there. So I'm very grateful to hopefully have saved you from losing money. And hopefully that wasn't one of you that jumped in there. Speaking of jumping in, interest rates down about 0.5% if you do the 30-year national average according to bank rate there. So we got interest rates down, bonds actually moving higher. Bonds are sort of suggesting that cuts will come sooner from the Fed than what is probably realistic. Jerome Powell on Friday kind of even said that. Nonetheless, bonds keep moving higher. And people are buying houses like crazy there. So mortgage rates fall about 0.5%, but we got mortgage applications up back to about summertime levels, which I know is not like amazing, but it's off the bottoms, right? So kind of interesting to see small dip in interest rates. Oh, I want to buy a house. Yep, prices are a lot more. You know, prices on a percentage basis are as expensive as they were in 1992. Yeah. Big money, right? If you're going to go buying a house. Anyways, moving along, I'll cover volatility real quick just because that keeps coming up. Very low. There is no fear or very little fear in the markets right now. So if you're following along with anything volatility-wise, whether you use an ETF, futures index, whatever you do, very much near lows. There's not much else to say. And the price of oil almost breaking to new lows there. Continued weakness overall in gold. All right, let's go over to some stocks in the news, and I'll take your questions. There are a handful of stocks in the news. Hawaiian Airlines. So basically, Alaska Airlines, there's a couple things happening here. So Alaska Airlines is getting kicked out of the S&P 500. They said, we don't care. We're going to try to buy Hawaiian Airlines, right? They said, we're going to pay you $18 a share, all in cash, for a company that doesn't have cash, right? So they're hoping to make something out of this. They're buying routes, right, if you're familiar with that process there. But nonetheless, you see $14.22 a share. That tells you that the big money investors, they're not buying it. Deal's not happening at $18 a share. It may not even happen. And if you know a lot about airlines and geek out on the pilot stuff like I do, there's a lot of overlapping routes here. Who's going to have a problem with that? Who just had a problem with Spirit Airlines and JetBlue, right? The old government. So there's likely going to be this is not a, let's just sign on the dotted line and call it a deal. Yeah, I just don't think that's going to happen. Oh, but I should bring up Alaska Airlines, Solar Edge, right? And probably rightfully so. And then lastly is Sealed Air. Those three are getting booted from the S&P, and taking its place, welcome Uber. Right, so Uber actually posting some profits there and able to make itself into the S&P, as well as Jabil. Remember, they just reported a not so good quarter there, but still enough to make it in the S&P. And Builders First Source will be one. We happen to own that one there, and they're making their way into the S&P. So congratulations to them. That's a whole bunch of stocks in the news for you, but we're going to keep going. So Newmont, it's a gold mining company, and basically, you know how I say over the weekends, Barron's likes to do their thing. That's their big time to shine, right? And they said that with the price of gold being high, Newmont is likely one that's going to participate in a bigger way than the rest of them there. Didn't really move the stock here today, but that's their beliefs. Spotify hitting new highs. So they're going to fire a bunch of people, and this, I guess, has got to happen when the AI guy, what's his name, X, when the AI guy on Spotify, they call him X, can do the work. It's like, I don't know what we're going to do. Now, there's a couple things happening here. So they're going to fire people. You can't just fire, well, they're not just going to fire people and tell them to go away. They are going to be paying a lot of money in severances and things like that. They're also going to be they're allowed to get rid of some real estate. And because of that, it's going to cost them money. So they're going to go from an expected $40 million profit in this quarter to an expected loss of over $100 million. So I don't know there. And lastly, Wallbox. If you're familiar with Generac, right, the sort of backup power company there that was just, selling them like crazy there. They bought some of Wallbox. This is in your garage. It's like the little thing that goes on the wall. It's a box. Easier plugging into alternative power other than your normal power. So that was in the news there, and that helped for about a 13% much needed gain, it looks like, for Wallbox. All right, coming up tomorrow, you got AutoZone, Signet Jewelers, Dave & Buster's going to report there. I always like looking at that. Box is going to report, and Toll Brothers. Yeah, Toll Brothers there. And so you have Also, Builder's First Source will be volatile tomorrow. They're getting obviously put in the S&P, but tomorrow is their investor day, right? So you'll hear a lot coming out from them, and it'll be more prominent than it would normally be because they're now in the S&P. Before they would have had their investor day and like maybe 6 people would have cared. Now a lot more people are going to care. I'll take your questions if you have any questions. Otherwise, I'm going to get out of here. I still got a lot of work to do today. Yeah. Kirk says, man, the rumor is, see, the rumor is the Fed's going to cut rates in May. What? You want to bet? Bet you a box of cornflakes. Yeah. Guess the Dow. Cody's not here today. We're going to announce that tomorrow, but there, of course, was a winner, and it was someone who has won for the last, or has won 5 times, right? Did he say 5 times? We have a now 5-time winner. If you want to play, jazzwealth.com/guess the Dow. We're giving the money away whether you play or not, but generally speaking, there's not a lot of people that play. How do the same people keep winning? So we're just going to keep playing it. Feel free to put your guess in there. And we don't market to you. Like if your fear is like, I'm going to be on some mailing list, we don't have time for that, right? So you won't get emails for, if you win, we'll email you, see where you're at and stuff. But other than that, yeah, we won't bug you, promise. How often do stocks move in and out of the S&P 500? It is not a timed rebalance or a timed adjustment. They do their rebalance, NASDAQ just did theirs, but they can do it at any time. It tends to come in the middle of a quarter. And the reason is because of the minimum qualifications to be in the S&P. Now there's some discretion there, but it tends to be a quarter finishes, they report their earnings, and that last little thing is what does the trick. So they don't like set a calendar date or anything for it. The S&P 400 and 600 throughout the year, you can actually see like, just swapping stuff out little by little. Yeah. Thoughts on keeping your emergency fund in a leveraged ETF for the short term? It's not my choice, personally. I wouldn't see the need to really do that. I think I would prefer, as competitive as they are, just a simple money market fund, 5.3% with no risk, no volatility, no concern about whether they add more shares or reduce more shares, no concern about any costs, no concerns about what the Fed might say. You know what I mean? That's what I did. They're making their Guess the Dow guess on Friday midday. No, you can't do that actually. So the guess, if you made a guess for today, or your guess today would be for next Friday. So you can't guess on Friday and like see who wins there. You have to start having a playoff Guess the Dow. That'd be fun. I don't recall ever having a tie. Yeah. You like the Chinese stocks there? Well, so remember what's happening over there. You have we talked about it last week. You have this real estate issue that's blending in and is now dragging in some of the banks, even if they don't want to. That's going to weigh on things for a little bit. So I don't know that I'm excited to be Mr. Discount Buyer yet on Chinese stocks. We talked about Evergrande last week and the rest of them. It's not just Evergrande. It's a tough one over there. Okay. I love it. I love it. I love it. All right. I'm going to wrap it up there, and we will be back tomorrow, of course, to do this all over again. Appreciate you guys hanging out with us and supporting us and everything. We'll see you then. Adios.